This video is for educational purposes only and is not financial advice. Imagine you are standing at a fork in the road. To your right, the path narrows, descending into the cold, gray silence of a prison cell, where your assets are frozen and your freedom vanishes behind heavy steel bars. It is a haunting juxtaposition, isn't it? Often, the difference between living in the lap of luxury and spending your nights behind iron gates comes down to nothing more than a single piece of paper. We live in a world where the tax code is thousands of pages thick, a labyrinth of shifting rules and complex loopholes designed to reward those who know how to navigate the system and penalize those who stumble in the dark. It feels like a high-stakes game where the rules are written in a language only a handful of people truly understand. But the reality is far more nuanced. It's easy to think that the people who end up in handcuffs are inherently different from the people who end up on the cover of Wealth magazines. You might assume they are fundamentally dishonest, or perhaps just unlucky. They didn't understand the fundamental distinction between keeping what you earn and hiding what you owe. If you have ever wondered why some people seem to pay almost nothing in taxes while others face crushing audits, you are not alone. It is not always about luck, and it is certainly not about being a criminal mastermind. We are going to peel back the curtain on this delicate machinery, stripping away the jargon to reveal exactly where the legal landscape ends and the danger zone begins. Let's pull back the curtain on how this invisible line is drawn. Think of your finances like a high-performance vehicle. It's about mapping out the most direct route, keeping your engine tuned, and using the right fuel to ensure you reach your destination without burning through unnecessary resources. It is the art of keeping more of what you earn by playing strictly by the rules written in the tax code. On the other side of that guardrail lies tax evasion. It is the deliberate, calculated choice to lie, omit, or misrepresent the truth to the authorities. The distinction is as sharp as a razor. Yet many people find themselves walking too close to the edge because they mistake a shortcut for a clever strategy. Why does this distinction matter to your wallet? When you aim for tax efficiency, you are building a fortress of wealth that stands on solid, legal ground. But when you wander into the territory of fraud, you aren't just risking a fine. You are gambling with your entire livelihood. One audit can dismantle years of hard work, turning a profitable portfolio into a liability that follows you for decades. That frustration is universal. You want to be the person who understands the architecture of the law so well that you can lean into it, rather than the person who tries to run from it. If you view the tax code as a puzzle rather than a trap, you unlock a different kind of power. You stop looking for ways to dodge the inevitable and start looking for ways to align your financial habits with the incentives the system offers to those who know how to ask. Let's examine the concrete strategies that keep your money safe while you scale your net worth. Imagine for a moment that the entire tax code is a sprawling, high-stakes 3D labyrinth. But to the architect of their own fortune, this structure is merely a series of corridors, each governed by specific, clearly marked rules. When you engage in avoidance, you're essentially reading the blueprints. You're identifying the pre-built shortcuts that the system has purposefully left open. The government wants you to contribute to your retirement, so they've built a dedicated corridor, your 401(n) or IRA, where your money can grow without being taxed at every turn. Navigating this maze requires a precise touch. You're checking your map, identifying the credits you've earned by making certain life choices, and adjusting your financial gait to stay within the lines of the law. You aren't running from the authorities. You're walking exactly where they've invited you to walk. You aren't looking for a secret exit. You're looking for the most efficient way to reach the end of the fiscal year with your capital intact. When you utilize a tax credit, you're taking advantage of a specific gateway designed to reward your participation in a particular sector of the economy. The beauty of this architecture is its transparency. You aren't hiding your assets. You're placing them into the specialized containers provided by the legislature. This is the art of financial literacy in action, recognizing that the tax code is not a static obstacle but a dynamic, navigable structure. You aren't gambling with the IRS. You are operating within the guardrails they've installed to guide the flow of capital. If avoidance is the art of navigating the maze, we must now address what happens when someone decides to jump the fence and ignore the map altogether. Imagine a bridge stretching across a deep rocky canyon. When you practice tax avoidance, you're walking across that bridge, utilizing every support beam and railing the architects, the tax code, provided for you. But then, there's the temptation to take a shortcut. You see a gap in the railing, a way to shave off distance, and you decide to leap into the void, hoping to land on the other side without paying the toll. It's the moment you decide that the rules no longer apply to your specific architecture. You start by inflating expenses, claiming that a luxury getaway was a business conference, or listing personal trinkets as essential equipment. To you, it looks like a bridge. It holds your weight for a season. The IRS audit isn't a random storm, it is a stress test. They are checking the foundation of those inflated deductions. When the pillars of falsified receipts and omitted earnings begin to crumble, they don't just crack, they collapse entirely. The weight of the law, which you are trying to bypass, suddenly lands directly on your shoulders. You aren't just losing the money you tried to shield, you're losing the integrity of your entire financial structure. It's a precarious way to operate because, in the eyes of the authorities, the difference between a clever deduction and a criminal act is often just a stack of missing papers. And that brings us to the most critical realization. How do we distinguish between a legitimate mistake and a calculated choice? The shadow of an audit looms large in the public imagination, often portrayed as a terrifying, faceless entity waiting to dismantle your life for a single misplaced decimal. But here is the reality. The system isn't hunting for saints, it is looking for patterns. You'll hear the refrain at dinner parties: everyone takes cash under the table, or everyone writes off their personal vacation as a business retreat. This "everyone does it" myth is perhaps the most dangerous trap of all. It creates a false sense of security, a collective delusion that if a behavior is common, it must be permissible. Just because a shortcut is well-trodden doesn't mean it isn't a cliff edge. Think of it like driving a car. If you drift over the center line because you were distracted for a split second, you've made a mistake. To an auditor, the distinction isn't found in your intentions, but in your documentation. You are inadvertently building a narrative of negligence. If the authorities investigate, they don't see a well-meaning person who just forgot to keep a logbook. Small, repeated errors are rarely dismissed as simple blunders. The "I didn't know" defense loses its shine when the evidence suggests you knew enough to benefit from the ambiguity. It is remarkably easy to slip from being a taxpayer who is simply bad at bookkeeping to someone who appears to be systematically undermining the system. It's about recognizing that the gray area isn't a playground where you can make your own rules. It's a minefield where consistency is your only map. But even with the best intentions, how do we bridge the gap between keeping records and truly mastering the strategy of compliance? The bridge isn't built on guesswork. It's constructed with the bedrock of knowledge. When you shift your perspective, you realize that tax literacy isn't just about filling out forms. It is the ultimate shield. It is the sophisticated armor that guards your hard-earned capital, ensuring that every dollar you retain is kept not by cutting corners, but by navigating the landscape with intellectual precision. True mastery over your financial future comes when you stop viewing the tax code as a burden to be dodged and start seeing it as a blueprint to be utilized. They leverage the rules, incentivize their growth through government-sanctioned pathways, and build structures that are inherently resilient. Knowledge is the leverage that turns a chaotic financial life into a streamlined, efficient engine. However, even the most dedicated student of finance knows that there is a vast difference between reading the map and driving the car. You don't have to navigate these complexities in isolation. The most strategic move you can make today is to partner with a seasoned professional, a tax strategist or a fiduciary advisor who treats your wealth with the same rigor that you do. Let's distill this journey into 3 core pillars. First, distinguish the vast chasm between evasion and avoidance. Second, embrace the power of proactive documentation and legal optimization. Finally, move from passive observation to active collaboration with a qualified expert. Your financial legacy is being written with every decision you make right now. Don't leave it to chance. If this breakdown helped you see your financial landscape with newfound clarity, hit that like button to spread the word, and subscribe to join a community dedicated to mastering the mechanics of wealth.